Welcome back, everybody, to session 2 of our webinar conference this afternoon. I am delighted to introduce Diane Whitmore Schanzenbach as the moderator of this session. Diane's a Margaret Walker Alexander Professor of Human Development and Social Policy and the Director of the Institute for Policy Research at Northwestern University. Diane's an expert on all matters dealing with low-income families, and I'm delighted that she was willing to serve as moderator for this next panel. And Diane, the floor is yours.
Thank you very much. Thanks, Jim, and for everyone who put together this important set of panels. Just to start off, I wanted to frame it as stating the fact that research extremely clearly shows that there's a huge value in supporting low and moderate income children with additional resources. This is true. Research supports it from the in utero period through early years prior to school, and then through the elementary, middle, and high school years. There are large returns to additional safety net spending. We know that from SNAP and the Earned Income Tax Credit, also from cash benefits, such as from Randy Key's work. Randy was on the last panel. When kids have more resources, they have better health and more education, and they grow up to be healthier, more economically successful, better mental health, et cetera. Just knowing this, what's happened in the background, though, is we've shifted more and more of the social safety net support to be conditioned on work. The National Academy a few years ago put out a blockbuster report showing what it would look like to reduce child poverty by half in the next decade. And in doing so, have relatively little impact on work. We've got a couple members of that panel on the last panel and on this current one. Also, we just, as we know, and we're going to talk about here, we just have paid out the first 2 months of this newly refundable and monthly child tax credit. In the first weeks after that, the Census Pulse data shows that hunger in households with children declined by 25%. And about half of families say that they used some of this child tax credit benefit for food, because indeed, like leisure, food is a normal good. There's lots to learn and monitor going forward, but we're here today to talk largely about the child tax credit, also a little bit else. And fortunately, as advertised in the last panel, we have all the answers that you're looking for, so stay tuned. I want to briefly introduce the members of the panel, starting with Len Burman. He's the Institute Fellow at the Urban Institute and the Paul Volcker Professor of Public Administration at the Maxwell School at Syracuse University. Next will come Tim Smeeding, the Lee Rainwater Distinguished Professor of Public Affairs and Economics at the University of Wisconsin. Next comes Melissa Kearney, the Neil Moskowitz Professor of Economics at the University of Maryland and the Director of the Aspen Strategy Group. And then finally, Nada Eissa, an Associate Professor of Public Policy and Economics at the McCourt School of Policy at Georgetown University. Truly an expert panel, and we look forward to hearing from you. Len, take it away.
Thanks, Diane. And thanks to the organizers of this program, which is really fantastic. I'm going to talk about the virtues of almost universal child tax credits, as well as a proposal that I developed to overhaul and expand the earned income tax credit and the child tax credit. I have all the answers to Bob Moffitt's questions, but I'm not going to tell him because he would just get too excited. Can you turn to the next slide? I actually don't have any of the answers to Professor Moffitt's questions. So there's actually been a remarkable thing that's happened with respect to the child tax credit. If you look at this slide, if you look back in 1998, the first year in which there was a credit, it was of no benefit to families earning $10,000 a year. There was a small benefit for families with $20,000 a year in earnings, but only because they had a little bit of tax liability and it offset that tax liability. But they didn't get the full benefit of the credit. There was a $400 credit in the first year, Then it went up to $500 in the next 2 years. And then it was phased up to $1,000. And I think actually, yeah, okay, $1,000 and eventually to $2,000. I'm sorry, it was phased up to $500 per child in 2001, 2002. So $2,000 to $1,000 for a family with 2 kids, and then a maximum credit of $1,000 per kid starting in 2003. But you can see that until really until 2021, low-income families only got a partial benefit or no benefit at all from the child tax credit. Initially, we had the subsidy that was only from, it was a middle-class entitlement. There was no benefit to families who really, really needed help. And that changed kind of slowly over time as there was a refundable part that was added, but the refundability was tied to earnings. And then the credit was increased in the 2017 legislation, the Tax Cuts and Jobs Act, to $2,000 per kid. But still, for families that didn't have any earnings, they got no benefit from the child tax credit. And for low-income families, they got very little help. 2021 was really a game changer. For 1 year, and the Democrats in Congress are trying to make this permanent, the child tax credit was made fully refundable, which means that even if you had very low income or no income at all, you would get the full $3,000 per child credit. For younger children, it was $3,600 per child. This is really huge. It's a lot of money for low-income families. It's a lot of money for even middle-income families. When you look at that chart, for a couple with 2 kids, it's $6,000, which could be, more than 10% of income from a middle-income household, and huge for people close to the poverty level. And research suggested that this expansion had a major impact on poverty. Now, those of you who are paying attention will notice that I'm cheating by referring to a married couple in these calculations. I just did that because I didn't feel like building a tax calculator. And married couples basically didn't have any tax liability for most of these years. But you'd see the same pattern for single parent families. Can you go to the next slide, please? So what are the advantages of a fully refundable child tax credit? One, as Diane noted, supporting children pays huge social returns over the short and the long run. Nathaniel Hendren has a survey where he pulled together research from all sorts of different sources. And what he found was that subsidies aimed at children often more than paid for themselves over time, because it helped kids to grow up to have higher incomes, to be healthier, to use less of social safety net than they would otherwise. The other thing is that targeting subsidies at children is a good way to win bipartisan support. Most voters think that families with children deserve support. As I'll mention in a moment, they also think that families who work deserve support. There's a nice new book by Chris Ellis and Chris Farrisee that I cited at the bottom here that found that based on surveys, the tax expenditures are much more likely to win support from conservatives than direct spending. For liberals, it's pretty much the same, whether it's cash transfers or tax credits. And universality builds public support because it makes the programs look less like welfare and more like something that benefits families like you and me. And sadly, there's a racial component to this, but the fact is that it's easier to pass these kinds of things. Next slide, please. So I'm going to talk for about a minute because I'm already running out of time about things we could do to modify the earned income tax credit and the child tax credit. I wrote a paper. Actually, I'm sorry. I'm getting ahead of myself. There are issues with the earned income tax credit. One of the most significant, if you care about kids, is that they leave out single men. There's a tiny, tiny subsidy for single men. And a lot of those single men have kids. And if somehow you could boost their incomes, they'd be more likely to make child support payments, more likely to stay connected with their children. And that would be good for their families. There are issues of work disincentives. Obviously, those have been found to be small empirically, but they do exist. Income targeting makes the earned income tax credit look like welfare, which limits public support. And it doesn't do workers whose wages have stagnated for decades. They're big marriage penalties. You can lose part or all of your earned income tax credit simply by getting married. And there's no reason why the tax code should do that. And compounding work and children ineligibility and phase-ins and phase-outs adds complexity. It makes it harder for people to even figure out whether they're eligible. And it's harder for the IRS to administer. Next slide, please. So in a paper I wrote last year, I proposed the idea of a fully refundable wage subsidy for all workers, plus a fully refundable child tax credit. I obviously have huge influence. Congress actually adopted my fully refundable child tax credit. Possibly it wasn't my paper, but yeah, anyway. The universal earned income tax credit is 100% wage credit on the first $10,000 of earnings, and it would grow with GDP. So for the first time in decades, low and middle income families will be guaranteed of sharing at least some from economic growth. The subsidy is on a per worker basis, so there wouldn't be any marriage penalties. It also makes it easy to determine eligibility. You could actually advance this subsidy to families. Financing is obviously a big sticking point. I showed two different financing options of that, which I've been told is a complete non-starter, and an income tax surtax, which is probably a complete non-starter. But if we come up with the magic financing mechanism, this will be awesome. The package is extremely progressive and will virtually end poverty for working families. And could be politically attractive because it's universal, and because working people are also generally viewed as deserving of support. Next slide, please.
So sorry, Len, we're going to have to cut you there and put the rest in the Q&A discussion time and turn it over to Tim.
Could you just click the next thing just so you can see what it does for single people without kids? And then I will see the negative balance of my time. Thanks.
Oh. Hi, everybody. Thanks, Diane, Jim, Brad, Robert, everybody. I want to talk about the design and delivery of the monthly refundable child tax credit and the child independent care tax credit, which came up in the last discussion. And I want to do it quickly, so I keep everything on schedule. So next slide, please. Well, we've gone from tax policies where social programs go to hide, which is Jacob Marshak said that in the 1990s, to the IRS is now America's largest anti-poverty benefit administrator. It pays out more money than any other agency other than Medicaid. Okay, I'm going to focus on the CTC and the CBTC, not on EITC, but the EITC stays as it is. Talk about the IRS pros and cons and what else we need to do better to make the monthly CTC more effective. Next slide. So I want to talk about working class families because this is where there's a big impact. We just finished a volume for Annals on the effect of strong labor markets and the recovery from the Great Recession on the working class. And these are people in my definition here, between 100 and 200% of the poverty, $30,000 to $60,000 of annual income. And that's 38 to 40% of kids, way more than the number of poor kids, according to a recent Urban Institute paper. And as Diane mentioned, the IRS paid out credits to 59.3 million kids in July, and then added 1.6 million more in August. Now that leaves about 2.4 or more non-filers who didn't get the benefit yet. Most of them are poor, but we're working on that. I'll talk about that in a minute. Next slide. Okay, the blue collar, the working class, that's the middle bar there, the 100 to 200%, the highest yellow line. They get benefits of about $6,200 a family. That's more than 10% of income, the way I've defined it. They gain about $3,200 per family from the 2020, above the 2020 CTC. The largest gains are still at the bottom. And now this is independent of the earned income tax credit, which is still being paid to most, but not all working class kids. And I have a note about that later. Next slide. Okay, what's not to like? Well, what's not to like are immigrant families and grandfamilies, two groups of families who might not have filed, might not be eligible for the earned income tax credit, but are eligible for the child tax credit. In our National Academy of Sciences report, about 20% of the poor were immigrant families with kids born in the United States who are US citizens who have Social Security numbers. And those kids are all eligible now for the child tax credit. Not all of them are eligible for the EITC. So this is something we'll talk about in a minute. You have to go to the IRS non-filer sign-up portal. It's a nonprofit tax assistance. You have to trust somebody because you're going to say, here are my kids' Social Security numbers, here's my bank account, here's my address, and so forth. And we've already had a problem with this. The IRS has denied some mixed status immigrants wrongly. They admitted, and now they're back on. Part of the problem is that the website for the IRS was designed by Intuit, which is a tax prep firm whose stock, by the way, has gone up 65% since June, since they got assigned to do this, okay? But now there's new IRS action to allow a different outfit, a nonprofit called Code for America, to build a better non-filer portal. That should be a big step forward. They're a nonprofit that did a great job in many states in designing their SNAP delivery mechanism. And so I think that's good. Grandfamilies are those who are taking care of their kids and providing home and support, but may not be claiming them in tax forms, or may not be paying taxes if they've just got Social Security. They're also eligible for the child tax credit if they're taking care of kids with Social Security numbers. So those are two groups we have to work at. Next slide. Now, the child independent care tax credit, which is very close to a proposal that none other than Jim Ziliak put out in 2014 for the Hamilton project. And it's very similar to what we put in the National Academy of Sciences report. Right now, you get a fully refundable 50% rebate to workers with incomes under $125,000. So Jacob, it's for this 6 months anyway, it's refundable. The credit's up to $4,000. If you spend $8,000, you get $4,000. And if you have 2 kids or a kid and an elder person you're taking care of, you spend $16,000 and you get $8,000 back, okay? Qualifying expenses include formal care of a child. So either the provider has to have an ITIN or you have to pay Social Security taxes and record the tax number of the provider, okay? And it's there if you can encourage some taxpayer can work or look for one. Now, Jane Walvold and others say, well, or Robert said, well, how are you going to pay for this child care ahead of time if you have to wait to get the credit next year? That's what you use the CTC for. Already there is evidence that many families are using the child tax credit to pay for care for their children, and they'll get half of it refunded in 2022. So I think that's a big benefit. Next slide. Overall assessment, the IRS gets an A in dealing with the working class because of their links to the federal tax system. Bada bing, it happened. Plus, there's big visibility effects. Everyone is seeing that now. A lot of journalists I talk to who aren't high-income people are seeing it. A lot of local news stories. What are you doing with the money? Momentum is building. And that was, I think, the idea of getting it up. But so far, they only get a C for reaching poor and non-filers, okay? Some issues could be resolved administratively to bring the take-up rate closer to 100% for non-filers. And then the beauty of this is the administrative burden disappears. Right now, there's no work test. States can't interfere unless parenthood changes or whoever's in charge changes in case of grandparents, or the child ages out, the benefit just keeps on coming. And as you know, it has no take back right and so forth. And the last thing I think that could be done is maybe Congress, the administration can clear up the glitch between the EITC, where US born children, many immigrant identifiers are not eligible, and the CTC, where they are eligible. Catherine McLemore and Natasha Pulaskis wrote a paper on this issue with the EITC. Last slide, please. Okay, what's next? We got to extend refundable CTC and the CTC beyond 1 year. We're going to have to pay for that investment with higher taxes. We need to get more of the poor signed up. But the big bottom line is that for us economists anyway, this is a merit good with huge external benefits, as Len mentioned. We failed at universal health care for all. We were the first with universal K-12 education for all. And now we've joined 17 at least other countries with some sort of universal support for kids that recognizes that kids are expensive and we all want kids to do better. Those are my opening remarks. I hope I did well on time. Thank you very much, and I look forward to the discussion later. Bye.
Thanks, Tim. We'll turn it over to Melissa Kearney next.
Great, thank you. Okay, so I don't have slides. What am I on? Yeah, okay, great. So what I want to do is I want to talk about the concept of an expanded child tax credit or a child allowance from the perspective of the optimal design of a social insurance program or the widespread safety net that we have in this country. And I'm going to situate my observations in that framework. So this will be less policy wonky focus than Len and Tim's, but I'm going to ultimately make a lot of the same points, I think. I'm going to have 6 particular points about this. And I suppose I could title my remarks the same as Len did, which is the virtues of a nearly universal child tax credit. Okay, so one, from the perspective of social insurance design, in this country, we provide social insurance to people who find themselves in what economists call the bad state of the world. So we provide disability insurance for people who who become disabled and unable to work. We have unemployment insurance for people who lose the jobs. We have old age social security for people who outlive their ability to earn or they've outlived their savings. We have no social insurance for kids who, through no fault of their own, find themselves living in a home with material deprivation. And I think if most of us were going to design a social insurance system behind like a Rawlsian veil of ignorance, providing social insurance against child poverty would be the first type of insurance we should provide. So from the perspective of social insurance, an expanded child tax credit that gets money to poor and low-income families, or a universal guarantee of a child income or a child allowance is really good policy. Okay, second, from the point of view of government spending as an investment, and here I'm implicitly equating government spending through a dedicated spending program versus a tax credit or tax expenditure. Practically and administratively, they're different, but conceptually, they're the same. And we should think about whether we get a social return from the government allocation of resources. As Diane, Tim, Len have all alluded to, we have lots of evidence that alleviating material deprivation in childhood, supplementing the income of low-income families with goods leads to a lot of social benefits. The kids do better in school, they do better in the labor market when they're older, they have better health outcomes in both the short and long term. This is clearly a way for the government should be spending their money to get a positive social return. Now, in the case of the expanded child tax credit, up the income distribution, it's much harder to make that investment case, in my view. I think we have very little evidence that supplementing the income of middle or higher income families has this positive social return. So I think you have to lean on other arguments to justify why we'd want to expand the child tax credit or have a child allowance to higher income families. Third, this was a question that Elira brought up in the first time. This is unconditional on work status. There are pros and cons to that, okay? But in my view, it's a gaping hole in our safety net that we don't have a meaningful source of income support to kids whose either their parents don't work or they don't qualify, say, for SSI through a medical eligibility. And so right now, again, as Len made clear, the Earned Income Tax Credit does 2 things. It supplements wages of low-wage workers, and it also transfers money to families with kids. Those are 2 laudable goals, but they don't have to be accomplished with the same program. And so I like this idea of divorcing supplementing wages for low-income workers and getting money to kids regardless of their parents' work status. So, an unconditional child allowance, in my view, fills that hole in our safety net programs. Okay, fourth, the issue of near universality. So I already mentioned that on the one hand, it's hard to make an investment argument in favor of providing this type of child allowance or child tax credit up the income distribution. On the other hand, designing it in this way eliminates the work disincentives that are implicit in most transfer programs that give money at the low end, and then those benefits are clawed back as parents earn more money. So if you didn't like AFDC because you thought it had bad work disincentives, then you should like this design better because it eliminates that distortion away from work. Now, there's still an income effect, and so parents might choose to work fewer hours, but on net, we should expect to see less work disincentive from this design than other types of transfer programs. Okay, 2 more points. 5, we're talking about cash benefits now, and I think there's a real case to be made for supplementing our panoply of existing programs that get support to kids through public health insurance, through food and nutrition services. I would argue we need more dedicated assistance in the form of housing, but there's a good argument to be made to just giving families with kids unrestricted cash so they could meet their various needs that come at various times that they can't meet right now with the different siloed programs that our safety net has. You know, the criticism of this is some skeptics worry that parents won't spend the money in the best interest of the kid. I think we have good evidence from expanded EITC, from other sort of policy exogenous shocks to income to low income families, that in general, kids do better when that income comes in. So to my mind, that says, you know, even if there are some parents who won't necessarily spend the money all the time in the best interest of the kid, in general, we will expect that kids will benefit when low-income parents get more money. Okay, and the final point I will make is about the fiscal cost of this program. This just is not that expensive relative to the benefits and relative to the other types of spending and tax expenditures programs that our government has. So the child tax credit costs about $118 billion a year. The projections for the expansions under the recent ARA are about $105 billion a year. You know, again, in terms of what we get for that money, that's just not that much. Another way we could think about this is I had done this thought experiment in a Brookings report last October where I proposed that we should have Social Security for kids. And the idea was if we gave every kid in poverty in this country the average Social Security benefit that a retired Social Security beneficiary receives, that's $17,000, that would bring child poverty rates to below 1% for a price tag of less than $180 billion. Okay, so we could eradicate child poverty in this country for $180 billion. If we gave kids the average, half the average Social Security benefit, kids in poverty, that would be about $8,500. That would bring child poverty rates to below 4% at a price tag of $90 billion. So to put that money in perspective, let's think about a universal basic income, which has gotten a lot of, you know, energy and attention in the past few years. A universal basic income would give every adult in the country a meaningful amount of money, let's say $10,000. That would cost $2.5 trillion. Why are we even having that conversation when we could eradicate child poverty for $180 billion? Even if we give a targeted UBI to every adult in the country, that would be $1.5 trillion. And so again, you know, a targeted child allowance would cost a fraction of that. So for those main 6 reasons, in my view, this sort of expanded child tax credit, some sort of child allowance, even if we wanted to do this as a child benefit that wasn't run through the IRS, I think there's a really solid case to be made that this fits into a social insurance, a well-designed social safety net in our country. Okay, thanks. I'll stop there, Diane.
Thank you very much. Last but not least is Nada.
Sorry, I was on mute. So I want to thank the organizers for setting up this really informative set of sessions and for giving me the opportunity to participate. So I have the difficult task of following Len, Tim, and Melissa and trying to say something new. Needless to say, they've covered really most of the points about the EITC and the CTC, and I think you can sense that we have a lot of agreement amongst us, but there's also some other points where we might disagree a bit. And so what I wanted to do here is just add 2 points to the discussion. And the first has to do, 2 broad points, there'll be some. The first has to do with the EITC and the opportunity that the EITC gave us back when we started expanding it to really separate the population of the poor into those who can work and those who cannot. Think of it as in an extreme sense. I think the opportunity there was that it gave us that we could redesign our transfer system, our welfare system, to serve the needs of those who are not in the labor force. I think we haven't done that very well. And I think while there's a lot of evidence that the EITC and the CTC will reduce poverty, I think what we're missing is that the neediest populations are being missed, in part because the support with the EITC goes to working parents and not those who are out of the labor force. And when it comes to the CTC, even though it's not conditioned on employment or earnings, it is administered through the IRS, which creates a problem that, as Tim mentioned, that we don't reach those who are non-filers. In fact, the Treasury Department released data on the number of children who appear in the Form 1095, which comes from the insurance marketplace. It's health insurance data. Basically, it's insurance from the marketplace, from large employers, and where the kids show up in those forms, but they don't show up in the tax returns on surrounding, even looking a year before. So we're missing a lot of people, and arguably those are the people that we want to reach the most with our welfare system. So the other thing is that so to go back to the EITC, it doesn't necessarily serve the people that we want to reach. The other is that the focus has been on single mothers, and that's appropriate since they have the highest poverty rates. But we have to recognize that the EITC has very different incentives and a different set of implied values about the role of mothers in bringing up children. So when it comes to married mothers, the EITC serves like the traditional welfare system. Right? So think about a husband who's earning, the family gets gets a credit. If the husband's earnings, is most likely the case, is going to be in the phase out, the first dollar of earnings for the wife or the secondary earner is going to be taxed at a higher rate because of the phase out. And Hillary and I did some work on this many years ago, where we found some evidence that there was a negative effect on the earnings of married women. I think that given how much the EITC has expanded since then, it's and how far up the income distribution it goes, it's worth rethinking or re-evaluating that point. Today, if you take today's numbers, a married couple where the primary earner earns about $20,000 can get basically their income doubled if you consider the earned income tax credit with 3 kids. If you consider the earned income tax credit, the child tax credit, and say food stamps and nothing else, their income would essentially double from $20,000 to close to $40,000. It's hard to make a case that there's going to be any kind of an incentive for the caretaker, whoever's staying at home, to enter the labor force. That's obviously not the case with single mothers, where they have to work in order to get the credit. So on the one hand, we're saying that we want to incentivize people to enter the labor force, but at the same time, we're essentially subsidizing married parents, one of the married parents, to stay home and take care of the kids. So that's, I think, something to consider. It's a part of the design of, or the way that we've designed the tax system. So there's no easy fix for it, but I think we just need to be a little bit careful about saying that the EITC supports children in any kind of a uniform way across marital status. The last point, I want to reiterate what Tim said, which is I wonder if at this stage we are using the IRS too much for non-tax revenue reasons, right? So we've started the use of the IRS for explicit social policies, I think started back in 1975 with the EITC, at least in modern times. Since then, we've expanded the EITC. We have introduced the ACA, so the IRS has a significant role to play in the health insurance, universal health insurance, or Obamacare. And now with the CTC, the IRS is being asked not only to administer the tax credit, but to administer it on a monthly basis. And so I wonder if we're reaching a point where we're just putting too much on the IRS. There's also several people have mentioned the political economy of universal benefits, arguing that kind of helps sustain support for the programs. I wonder, though, if we wouldn't have done better by putting the universal cash child benefit in the welfare to be administered by the welfare system as a way to kind of shore up support for the traditional system, as opposed to giving it to the IRS and creating even more complications in terms of reaching the neediest populations. So I'll stop here, and I look forward to the discussion.
Thank you very much. I think we'll pull the panel up. I know Melissa Kearney is sort of lost power, and so she's trying her best to get back on. But as we're waiting for her, I'm just going to tee up sort of what I'm thinking is the big question that we promised to answer on this. And I'm going to ask each of you to sort of, opine on this. And that is, how much do we think that the child tax credit is going to reduce work and increase the purchase of leisure, which is a normal good? And how should we be thinking about this trade-off? And I was going to tee up 4 different lanes. You could pick one or more of these. The one, you could sort of go the nerdy route and help us think about the income versus substitution effect of that. And another, you could think about the philosopher route, which is, how should we think about that trade-off? I think if we thought that the child tax credit would reduce parental employment to 0, we'd think of that differently, as if it, reduced it 1 or 2%. The empiricist, which I guess there's a little bit of empiricist in my philosopher lane, but how much should this depend on how moms are spending their time, and to what extent does it depend on the fact that maybe inducing people to work will get them to better jobs, and those escalators to better jobs. And then sort of my 4th lane was political advisor, which is just how much of this is paternalism? How much do we just like to do paternalism? So I don't know, I can cold call you all because, I am a professor and all, or if anybody wants to jump in first. All right, Tim, let's give it to you. It looks like we got Melissa back.
Okay.
Sorry, I missed your question.
The nerd, glad you're back, Melissa. The nerd lane, the income effects are fairly small, and the substitution effects at the bottom for the EITC and for all the other childcare programs, all our National Academy simulations, all the work that Hillary and Robert did to make TRIM a better model by giving them state-of-the-art things, work is probably going to increase. Now, a lot of conservatives, on the other hand, like the child tax credit because it gives mothers more choice. And one final thing, instead of working the 3 to 11 shift at Quick Trip for $14 an hour, now you can work the day shift for $12 an hour, put your kids in decent childcare, and spend some time with them in the evening. So it has a lot to do with the schedules too. Or you can use the money to avoid, obviously, the CTC to avoid other things. But that's what I would say. I think that criticisms are overblown because there is no clawback, and people immediately conflate the CTC with negative income tax or AFTC, and it's not. Done. Next.
Len.
So one question that came up in the Q&A that's relevant to this is, well, shouldn't we just phase this out at low income levels? Why waste money on middle and upper income people who get the credit? And I think one of the big advantages in terms of work incentives is that you don't have big phase out. I mean, this is, for a family with 2 kids, you could be phasing out $6,000 benefits over possibly a narrow range of income that could compound with the phase out in the EITC. You definitely don't want to discourage low income households who want to work more and try to build human capital and get better off. So, just Tim pointed out that the income effects are relatively small, but this is I would flip the question a little bit and say it's better than alternative designs because the phase out occurs at high income levels. And my guess is those people are less sensitive, or maybe we don't care as much about how it affects their work incentives.
Can I just add to that, which is the only issue there is the EITC evidence suggests there's no response in the phase out. At least not a single study so far has found that. And that suggests that maybe we could do a bit more redistribution by phasing it out faster. I don't know if that's just that we don't have the right data or the right method so far to kind of tease out that effect, but it's not anywhere in the literature. So, and I think that makes the argument for universal benefit less significant on efficiency. Not, I understand the efficiency argument for it, but if there is little response, there's little distortion in the phase out, then it's not obvious that we want a universal benefit, except for political reasons. And
it could be that in combination with the EITC, that the child tax credit phase out would become big enough that people would actually notice it.
Exactly, that's possible.
So Diane, I would just add, so I feel like all of us have, we've spent so many years teaching and thinking about this idea of like, do we give more money down here and phase it out more quickly because we take as given these fiscal constraints and the government has a budget? And I'll just point out the irony that it seems like poverty scholars are the only one who still think there's a fiscal constraint and like the government has any budget, right? So like, do I think, we give $2,000 to families with $130,000? Maybe they don't really need it. Hey, maybe their kid could take some music lessons they couldn't take before. That's a way better use of government money than like, we're letting corporations write off all this pass-through income for what economic benefit? We're talking about forgiving the student debt of people with college degrees who earn or have the potential to earn a lot of money. And so I am all for thinking about the best way to redistribute scarce resources, but like literally like nobody else is thinking about scarce resources. And so, if some households get some money that allows them to take an extra vacation, do I think that's a really high use of government money? Not necessarily, but there are a lot of other places that we're spending money and we're giving tax write-offs where I think the social benefits are really close to zero.
Yeah, but Melissa, we're actually giving the child tax credit up to $400,000. There's an argument to be said that that is a true waste of public money. So
I am sympathetic to that. I'm sympathetic to that, right? But if we're going to lose support for this, if we're worried about disincentives of work, that's all I'm saying. Like I don't really see much reason to be giving money at that level either. But I'm a little bit more flabbergasted by calls for universal spending in other places as opposed to universal spending on families with kids.
Yeah.
Well, speaking of universality, I was going to tee you up my next, initially to Melissa, but anyone else is welcome to weigh in. A lot of the arguments you made in favor of the child tax credit are sort of in the same lane as arguments in favor of universal basic income. So is that what's next on the agenda, and should it be? I think I know your answer, but
maybe. And so maybe Nada, this is why I'm like making this somewhat counterintuitive point that I'm making, because if we start by thinking about how to target money on families with kids, I wouldn't be saying, oh, for sure, we should allow the tax credit to go that high. But really, I feel like this was almost a whittling down of this bigger policy conversation of a universal basic income. And all the reasons I didn't like universal basic income are basically why I like the child allowance idea, right? I mean, here we know, again, for most of these kids, or for many of the kids, there's going to be a positive social return. There's an important missing aspect in our system of social insurance now. A universal basic income essentially punts on the entire idea of social insurance. So people who like it say, well, now let's get the government out of the business of deciding who's worthy, right? If someone is disabled enough or old enough or their kids are poor enough, let's just get the government out of the business. So for people who like the UBI idea, they specifically want to do away with those categorical requirements. From the perspective of social insurance, like I think, that's a feature of our current system, is that we get resources to people that we think really need it. And so, I just don't see how you can make any sort of social insurance argument in favor of UBI. I already mentioned it's super expensive. And all of us has talked about the social return to spending on kids, low-income kids in particular. Proponents of UBI, they assert that people will use that money to invest in their skills, to start businesses. I don't know of any compelling evidence that suggests that that's the case. So I think the case for a social return on a UBI is also exceedingly low.
Mhm.
It also ties into political scientists' notion of deservedness. And I think whereas children are widely viewed as deserving of support, the stoner living in his parents' basement playing video games is not. In the UBI, we go to that person. I think that's a political problem, and also it costs a huge amount of money, as you pointed out.
I would add that one more thing to that, to the point that's close to where Melissa's coming from and that Nada mentioned. I wanted from the beginning the Social Security Administration to run this program. Turns out, if you look at the $30,000 to $60,000, these are not rich people. In fact, they're near poor people by a lot of definitions. The IRS is getting them, that's fine. But along with Elaine Mag and Jack Smulligan and others, we've tried to argue with the White House and others that you ought to combine it somehow. You ought to let Social Security Administration has 1,300 offices where people can actually come in and present their case and so forth. And the two of them can go back and forth. I mean, Social Security, when they start getting it paid out at 1099 from the Social Security Administration, can go into the IRS and so forth. So I'm hoping that the administration moves this way, particularly when we have trouble getting it to low income families. But my gosh, if we just keep doing what we're doing now, I think it's going to be fantastic. Somebody asked before, is this going to improve family stability and so forth? I think so. We don't know. But we do know that it will reduce instability at the bottom of the distribution because you'll have that check every month. We do know that a quarter of the evictions in this country are for $500 a month or less. You've got this if that's what you need it for, and so on. And if you put it with the child dependent tax credit, which will subsidize work, you don't have to worry about a slot. I mean, the supply side of the childcare market is still obviously a huge issue, and you might not get a slot, but that's going to subsidize your ability to go to work and give you 50 cents off on the dollar for every formal childcare dollar you buy. I think, and you're going to still get the EITC with a big lump in February and March. So I kind of like the package. I'd like to try it out for a few years anyway and see where it gets.
I'm just sorry.
I was going to piggyback on that and ask a question that came in via the text. Whether in the longer run, when we have time to really design this, more properly, we're not building it as we're flying the airplane. Do we think the tax system is the best way to distribute a child benefit? Nada brought up earlier, maybe it should be done through the welfare office. Many people have argued it should be done through Social Security Administration. If we keep it in the IRS, are there ways to make it easier for low-income families to file those tax forms?
Can I just say one thing before Tim disagrees? So the reason I brought up the welfare, I'm not suggesting that, but I'm just saying if the argument is to shore up that it's a political economy argument, why we want this universal benefit. If that's the case, then maybe it should be administered through the welfare system for that reason only, not to say that they would administratively do a better job. I agree Social Security would have been the natural way to deliver those benefits. But I also think that, as I said in my comments, I think we're just putting too much at this point on the IRS. And it seems to have gotten over time to be kind of acceptable that the IRS is the mechanism to deliver social services. It should not be. Whether that means we need some other mechanism to develop some other mechanism or just use the Social Security Administration, I don't know, but it should not be the IRS. We are, at the end of the day, missing the neediest people because we're administering it through the IRS. I think as much as we're going to see benefits, we shouldn't ignore the fact that we're not getting to where this instability is greatest, where the hunger is greatest, where the needs are greatest. And that's the non-filing, non-working population.
Just a quick show of hands. How many of us think that it should be done through the Social Security Administration instead? Just a quick show of hands. Does anybody disagree? Looks like Len might disagree.
Can I give if you really believe that the credits are politically more sustainable, maybe there's a way to use other government agencies as a way to administer the credits, like the way the health insurance exchanges do with the Affordable Care Act subsidies. So Social Security Administration can help with outreach. The health insurance exchanges can help with outreach. I also think the take-up is going to increase a lot more if the program becomes permanent, because it's a lot of money. People are going to learn about it from their neighbors and their friends. But it's definitely true that, the people who need it most are the ones who would least likely to claim it. For middle-income households, providing it through the tax system is relatively efficient because they already have to file tax returns, and the IRS has, most of the information they need to administer the program. But for low-income people, it is a challenge.
Can I ask? So I shouldn't think out loud on a webinar, but there's something for years that has been bothering me, and it's a little bit separate than the administrative points that Nada's making, which is, there's something to be said for just saying we care about taking care of kids in this country, and we're going to commit to a spending program. And, Tim described like these credits going where things hide. The tax code is so complicated, and it bothers me, but I don't know if there's more to it than just philosophical. It bothers me that we need to like hide this and make it complicated in the tax code. I mean, all of us study these little graphs to figure out where people qualify. Why don't we just commit to this as a spending program like all of our other spending programs? We have spending programs for disabled people. We have spending programs for elderly retirees. Why don't we have a spending program on kids? Tim, you could tell me who said it. Like, show me your budget and I'll show you your values.
I would agree with that. I just do not want the states running these programs.
Oh, yeah.
Diane knows, and we all know, the SNAP program is a very different program in the Deep South than it is in a lot of other states. And that we call in Chapter 8, we call it contextual factors. And it was clear there was a lot of discrimination. Rules are very different in different places. States, even like my own Wisconsin, which, luckily Mr. Walker lost the election and we got rid of it, but we were going to have work fair and this fair and that fair and drug fair and everything. That's what we need to avoid. That's my only thing, Nada. If it's run by a Social Security Administration or a national administration, okie doke.
All right, and I just wanted to acknowledge Nina Olson in the chat was noting that it's not going to be immediate. Like if we really do want the Social Security Administration to do this, we're going to have to build out more infrastructure, and that will be costly, et cetera. Another question that came in, this is a little in the weeds, and Tim Smeeding, I'd love your take on this. So how do we reconcile the failure of the advanced EITC with the unanimous agreement that the CTC should be paid monthly in advance? And I think that is pretty unanimous. A couple of our friends on the right disagree. So is it possible that people would prefer getting the lump sum payments on the CTC?
Well, some people do prefer already. There are people, you can go to the IRS and say, I don't want this every month. I want to get it with my check in the spring. A few higher income people are doing that. But the problem with the advanced EITC is it was limited to 71% of what one person could get. Employers were liable if, suppose we opened Melissa and Tim Enterprises and we hired 10 people. We said they all should get the advanced EITC. We're going to pay their Social Security taxes. And then at the end of the year, the IRS says, wait a minute, what's going on here? And they came, we closed the doors and we've left. So to avoid fraud, the advanced EITC was laid on the employer. The employer would be responsible if there was a problem. And that killed that. And now it seems to me that with the monthly CTC and the annual refund from the EITC, you've got the best of both worlds. You still got your forced savings and Christmas Club, but then you've got an annual or a monthly something you can count on.
The flip, so let me just add one point. The issue with the monthly benefits is actually it's discouraging some people who don't want to end up owing the IRS at the end. So there are explicitly people who are saying no. In outreach in Philadelphia, I think Virginia, they're seeing some of this today. And it's reasonable to say you don't want to be in a position.
I was on a webinar the other day. There's a lot of, in particularly complex families and families where one parent isn't living with the parents. There's a lot of argument over who's going to claim the ITC and who's going to get the CTC There are people complaining my boyfriend stole my wallet and took the kids' social security numbers. And so I went in to get the CTC and I found out the social security numbers were already being used. Things like that. It seems to me you have to sort those out, divorce cases and so forth. And you need a place you can go, it seems to me, like a social security office with the extra money for them to do it. I don't think a website's going to do that.
So related to this, Paul G asked if we should think about making the CDCTC paid monthly as well to sort of offset that sort of flow of childcare costs. And then that leads into another question I got, which is anybody willing to speculate about whether there are going to be important interaction effects between these new programs? Like, are we going to see, sort of that, part of the Heckman curve where it gets, even more benefits?
I don't know. It would be really hard to administer a monthly child-dependent child tax credit because depending on where your earnings are and so forth. But the problem with the annual payment is that you have to pay for it. So that's why a lot of people seem to be using the child tax credit to pay for childcare now, and then getting a bigger refund at tax time next year. But we haven't got enough experience to know that yet. Jim Ziliak may have some thoughts on this.
But I think, Diane, all of these questions and comments underscore the point that doing things through the tax code makes it complicated because you're getting a monthly advance on something you're not sure what it's going to be later, as opposed to knowing my family gets $400 this month. I don't have to worry that next year I'm going to have to pay some of this back after it's gone, right? So that's part of what is making the monthly payment scheme complicated, is that this is an advance on a tax credit.
Yeah.
My understanding, maybe someone knows this, but my understanding is that the legislation does not allow the IRS to recoup any excess payments on the CTC.
If your income is less than $60,000, you have a hold harmless this year. That was particularly, there's a lot of thought of men who might be claiming it because they somehow did and they would have to pay it back. A lot of people at the Center on Budget and Policy Priorities were very adamant about that. And I hope that can be worked out in the future. But for this year, family with income less than $60,000 are held harmless if you incorrectly got the benefit. Again, that's who, in complex families, who is providing the support, who's providing the housing, who should be getting this benefit. And in many cases, it's complicated.
One last one that I just can squeak in before the end that came in was, are there other things to say about the impacts here on immigrants? I know, Tim, you mentioned a little bit about the CTC versus the EITC, but are there other things that we should be talking about?
There are a lot of people who want all immigrant children to be eligible, but whether they were born in this country or not, the vast majority of children of immigrants were born in this country. So we're getting about 90% of them. And if you wanted to give social security numbers to, refugees, to which they do in some cases, and other people, and get them on the way to a green card, then they would become eligible. So that's my answer. But I do know that Doris Acevedo Garcia and others are really adamant about the benefit being expanded to all immigrant children, regardless of their birthplace.
And can I raise something that I think we should also be thinking about? So there are a lot of people who like this idea of a child allowance because they want to ameliorate the economic pressures on families with kids. There's another group of people who support this kind of thing in terms of a pro-natalist policy, like explicitly increasing birth rates. And so I just want to raise that. This is something I've been writing about the past year, mostly with Phil Levine, thinking about there's been a decrease in birth rates in this country. Our fertility rate is now below replacement level. We don't have time to talk about all the reasons why actually that matters. It has economic policy, social insurance implications. And so I think there's a case to be made for pursuing sort of these pro-natalist policies, making it easier for families to afford kids. My read of the evidence on what we would expect from something like this, or from expanding parental leave, et cetera, is that the numbers we're talking about, the benefit amounts we're talking about, those might, like if someone does a study in 3 years, you might find a positive effect, but it's not going to be substantial. And so we really shouldn't be thinking of a child allowance or a child tax credit as also a potential answer to our, not everyone likes to think about it as a problem, but our challenge of declining fertility rates. So I just wanted to put that on the table.
In the past, of course, we've dealt with that with immigration, but that's not exactly the most popular thing.
That's exactly right.
Exactly. And I'm going to turn it, thank you. I'm going to thank the panel first. I'm going to turn it back to Jim to adjourn us.
Thank you so much, Diane. That was a fantastic discussion, lived up to my expectations and actually far exceeded it. Thanks so much, everyone. Thank you for the first panelists as well for those excellent papers and the conversation. To our participants, wonderful questions that really added to the depth of this discussion today. And we have recorded the webinar, so we'll be posted if you want to go back and listen to some of this. The presentations and the papers from the first session are available as well at the IRP website. So I encourage you to go there later, maybe use some of this for classroom purposes later on as well. Again, thanks to everyone for this fantastic 3 hours together. Again, we can look forward to the day where we gather in person to do this live. But in the meantime, it's great to have this discussion at this very important point in our national dialogue on the role of policy and how we treat our children. With that, I'd like to say thank you and have a good afternoon.